Schiessl on just now. Let's connect with him to understand that what has gone wrong. Why are foreign institutional investors selling? Jonathan, I always thought you loved India.
Yeah, look, I think the problem isn't necessarily India. I think generally, obviously, we've had a period of exceptional volatility in the US bond markets in particular. And obviously, the dollar has screamed higher, and that's never good for emerging market assets as a general rule. And clearly everybody's worrying about a global slowdown, recession, and therefore people are just pulling out of emerging markets in general. And then obviously a market like India, which has been an exceptionally good performer versus the likes of China. Look, I guess there's a bit of profit to be taken there as well. So it's not really an India problem, it's the problem elsewhere, I would say.
So Jonathan, what has been your tone of activity when it comes to India of late, let's say 3 months?
Nothing. Very happy with, we tend to, our investments towards India tend to be much more longer term. We try not to be too short term. We have taken in other areas some equity weightings down to sort of underweight positions. But actually within the context of an overall equity allocation, we've kept weightings in emerging markets and places like India up. So actually, we've not taken money out of India at all, and we continue to like it on a medium to longer term basis.
But in the last month and a half, Jonathan, you must haven't added positions, is it?
Sorry, the first part of your question I couldn't quite hear.
No, I was wondering if you've added any positions to the existing stocks in the India portfolio.
No, not yet. Again, the market obviously has shifted around a little bit. We don't have that many, if I'm honest, that many Indian stocks. So what we tend to be more longer term, larger cap type names. We haven't really played the sort of mid cap or smaller cap side. We just focus on a relatively small number of very liquid large cap names, which has served us quite well over time.
Just looking at the Tata Motors Group wholesale figures for the second quarter, that also has seen an uptick, as has JLR as well. You remember the report came in just last evening, and we've seen a steady performance from Tata Motors. 623 is where the stock is right now. Of course, 10% of the Tata Tech IPO reserve is going to be reserved for Tata Motors shareholders. So you are seeing a lot of frenzied buying for Tata Motors because of that trigger too. But Kunal, let's revisit for the chart of Tata Motors, both in the short term as well as the long haul, say 1 year or so. Is it still a good buy?
Yeah, it's a very good buy.
You've not sold your original position?
No. I didn't
not
buy.
even a single share? Wow. So not even a single share?
No.
But it's in your trading portfolio also.
Yes, that's for the futures.
Yeah.
So I think even in the recent correction, the last 2-3 months, specifically the stock had come back to that 600 levels. I think if I'm not wrong, a couple of months back I had mentioned that closer to the 640 mark, that the stock should now get into a bit of a sideways range because the indicators were extremely overbought. Now luckily the stock in the last 3 months has not gone into a major correction. So it's not that the stock has gone to 550, 520 odd mark, because from there the retracement would have taken a lot of time. Now the good part is that the stock has gone through more of a time-wise correction for Tata Motors. This could probably indicate that the breakout could be much more sooner for the stock price. Now that's where I would believe that 660 levels should be taken out for Tata Motors pretty soon. And my sense is that the stock on the longer term basis also looks very attractive. So it's a matter of time frame as well as holding power even from current levels. I would look out for much higher targets on the longer term basis.
623 rupees for Tata Motors. What a year it's turning out to be for Tata Motors. What a year it's turning out to be for ITC. And Nooresh, we've not spoken about ITC at all. I mean, it's been a while, right?
Yes, because the stock has also gone sideways. It made a classical top around that demerger news. The day the news got announced, we created a top at 480 to 500 band, and now we've gone sideways. It's testing the recent lows, but there is no follow-up selling as such. So it broke below the recent lows of 435, 440. But we did not see much selling. So this indicates that the stock is getting into a consolidation rather than a deeper correction. So it could be more time-wise than price-wise. So going forward, would expect 420 to 460 range to continue for quite some time.
Guess what their target price in Tata Motors is? 786. So that's indicative of quite a bit of uptick even from the current levels. They're saying that JLR has reported both a sequential as well as an annual increase in the retail and wholesales volumes for the second quarter. They see a very strong order book and healthy growth for the retail demand, and that they are on track to meet the full year FCF estimate as well. That's JLR that I'm talking about. Tata Motors holding steady in trade. In fact, on that note, let me take it across to Sharad as well and get in all the chatter from the dealing rooms this Friday afternoon. Sharad?
Well, yes, in focus we're having C Infosystems. The brand is Map My India, and what we are hearing from the dealers is buying has been coming in from certain institutions, the domestic ones. And also do remember the volumes, that has also picked up almost 2 times its 20-day average. And importantly, the key DIs already invested in the company include Tata Mutual Fund with almost 1.5% stake. Now looking at the stock price movement itself, from the September low, the stock has been on a roll, going up almost 30% and also currently rallying in the day's trade. Apart from strong volumes and price action, there are important commentary coming in, especially for the government business, and they have stated that the entire revenue contribution coming for the government business is expected to touch 20%, and the management in a recent interview to ET Now that stated that the government business is expected to grow 6 times over the next 5 years itself. And the buzz is in the industry that there might be some more orders coming in, especially on the satellite front itself, which will be coming from the government, which will actually benefit the company, especially on the smartphone maps front.
Map My India. Jonathan, within the new tech companies in India, whether it is Map My India or Info Edge, I mean, Info Edge is not new, but RateGain, there are a couple of drone companies which have gone public. Do you have something on your radar which you would find attractive, which you would like to buy, maybe it's not now, but on a decline?
Yeah, look, if honest, as I said a moment ago, the newest stuff, we probably need to do a little bit more work on. We've tended to focus just on large cap, more, your usual type of Nifty 50 type stocks. The new stuff we haven't, we don't sort of tend to go down to that sort of level currently. So no, I'm afraid we don't have an opinion on that one.
Jonathan, what is your opinion on HDFC Bank? I mean, they have surprised everybody with quarter-on-quarter growth. Yet it's not a merger phenomenon. It's almost a 3-year phenomenon that HDFC Bank and Kotak Bank, they've been stuck in a range. I mean, now it's getting painful if you own these stocks. While last decade, if you owned these stocks, it was a rewarding experience. Now it's a painful experience.
Yeah, look, totally agree with you. I think it's interesting. The views on the street seem to be generally still very positive. It's a name that we do have and do very much like. But at the moment, as you rightly say, it's been underperforming. It's just difficult to pin the reason. Is it just indigestion from the merger still carrying on? I guess maybe the street wants to see a bit more evidence of how the merged entity is actually performing before it gets a bit more conviction on the name. But absolutely, it's been a phenomenal performing bank up to this last period. And we still think the metrics look very attractive. And it's a name we're happy to hold.
Right. Okay. That's the take coming in on Kotak as well as HDFC Bank and where those stocks are headed right now. On that note, let's take in some closing trades as well. Nooresh, what do you have on your list?
So that would be GAIL India. The stock has been showing a lot of relative strength, bouncing back from that 118.20 breakout levels. Could eventually break out above all-time highs and go higher. So looks promising here.
Kunal, what about you?
So I'll go for a contra buy on SBI Cards. The stock has already seen a sharp correction from 925 to sub 800 levels where it's trading. So we'll look out for a decent bounce at current levels.
Okay, on that note, let's take a very quick break. We're holding
Conversation with our technical experts and Jonathan Schiessl. Jonathan, it is historically a very obvious view that foreign institutional investors, they love to own Indian IT companies. They generate a lot of cash, the return ratios are smart, they keep on doing buybacks. Do you think the downturn in the IT space right now is more like a cyclical downturn?
Yeah, I think if you look at the Indian IT companies and compare them to global peers, performance is pretty similar actually. Sometimes Indian companies outperform, but yeah, look, we remain quite positive, obviously on the medium to longer term view with these companies. There's good structural growth we think that is available to these companies, and they have obviously one advantage, I think, over some global peers in their access to, their access to graduates and trained engineers, which is easier to access in India than I think some other countries. So we're still very positive on the names. We think there's still good growth available going forward, but sure, these stocks and sectors do from time to time go in favor, out of favor, but ultimately we think that there's still good structural growth that's available for these stocks.
47 rupees for 4% higher. On your screen, there is Tech Mahindra, which is 220 rupees. DLF fund is, it's just been such a comeback stock. If DLF is doing well, the real estate index does well. If the real estate index does well, then you will see allied companies, the tube companies, the pipe companies, the entire space in terms of where the tiling companies are moving, that entire space will do rather well. Jonathan, there are a lot of popular themes in India, at least at the HNI level. Defense, railways, power, manufacturing. Which one do you like and why?
I think, clearly it's finding the appropriate companies that feed into the sectors that you're looking for, the themes that you're looking for as such. For example, I mean, we've loved the whole defense story for quite some time, but finding we have a preference for private sector companies where possible, and finding relevant companies that play into the area looking for is quite difficult sometimes. Not just in India, it's a global issue in many respects. Obviously, you just have to look at the L&T chart, and it's been a phenomenal performer because it plays into a lot of the sort of themes you've just highlighted. We sold L&T a month or two back, obviously. Thinking that the stock had, that the valuations were looking a little bit on the stretch side, but the stock has continued to move higher because, quite frankly, it's one of the few large cap names you can buy that feeds into many of the areas you just mentioned, including obviously they have a small and growing defense business as well. So yeah, they're interesting areas, but clearly it's finding the names that play into it in a meaningful way, which is probably more of the issue.
Jonathan, great to chat with you. Thanks as always for taking the time out. Let me also